Yo, what's going on, guys? Welcome back to another video on the channel. In today's video, we're going to review a few swing trades, one that I'm currently holding and two that I closed today for some really nice profits. If you've been around on the channel, then you know that on January 28th, I opened up a GME put option. This expires in the middle of March. It's a $50 put option, and surprisingly, I am still red on this position. Now, I am considering exercising this option, so if you're not familiar with how that works, then make sure to stick around to today's video and I'll walk you through it. I'll also break down the profits that I took on my CCIV swing and my Riot swing trade. I want to give a massive shout out to everyone out there that's been subscribed to the channel, that's watching the channel, that's also pressing that like button for me. We just hit 20,000 subscribers, and when I started this channel a year ago, I had no idea that it could grow to this magnitude. So again, thank you to everyone out there. If you're enjoying the videos, make sure to subscribe, make sure to press that like button for me. Let's go ahead and jump into this video. So you guys have probably seen GameStop over the last few days. The stock price is continuously falling. It broke under $50 and almost broke $40 a share. And if I told a new investor that's not familiar with options trading that I'm holding a GameStop $50 put, you would probably think that I'm up a ton of money. But unfortunately, I am still red on this position because of the high implied volatility that was going on when I purchased this put option. If you're not familiar with that and you want to learn more about it, you can check out my video on the channel about buying this put option in a high IV environment. I'll put a link down in the description below, and I'll also pop it up on the top of the screen for you. So since I am still red on this position, I am considering exercising this contract. What exercising a put option does is it gives me the right to sell 100 shares, so short sell 100 shares of GameStop stock at my strike price, which is $50 per share. I have to subtract the price that I paid for the premium, and that gives me my break-even price. So if GameStop is below my break-even price by the time of expiration, I can get out of this put option with a profitable position by exercising the contract. Now, this definitely will not be a long-term short position on GameStop because I understand the risks of short selling GameStop. You guys obviously know as well. You've seen what happened to these hedge funds that were short GameStop. So this will just be a good way to get out of this position with a profit if the price is below my break even. So let's go ahead and jump onto the computer. I'll pull up the position. We'll go over the break even price. We'll go over the chart, and I'll sort of walk you through what my plan is here with this put option. All right, so I have GameStop, the chart pulled up. Let's go ahead and take a look at my position, do some technical analysis, and I'll sort of break down my break even on this put option. So if you guys watched my last video on GameStop, you know that I bought the put options back on the 28th, and the stock was trading at $250 at that time. So when the stock was over here, it was around the 28th of January, and I bought it and the stock was around $250. I'm still down in this position, even though the stock fell this much, and that's because obviously the high implied volatility. But in ignoring where I got in, let's just go ahead and focus on what I have to do now to try to get out of this in a profitable position. So right now the stock is trading at $40.42 in the after hours today. We've seen, sort of consolidation after this big fall, and it looks like we may be breaking down for another leg here. Now, what I think is that GameStop should try to come back to around where it started if we don't see any more major short squeezes, potentially around $20 a share. That would be ideal for my situation. But right now we're at about $40. So pulling up my position, you guys will see that I bought this GameStop put option. It's a March 19th expiration $50 put. Now I bought this for $17.25. Today I was up $242 on it, but total I am down 16%, just around $285. So not a huge loss, nothing that I will not recover from, but I think I have an opportunity to exercise this and potentially make some more money. This is my SEP IRA. This is an IRA that I have on top of my long-term portfolio. You can see that obviously the market has been taking a little bit of a hit lately. Today was not the greatest day for it, but let's go ahead and calculate the break even. So how you do that is you go ahead and you do $50, which is, my strike price. That's a $50 put. And you subtract the premium that I paid for the strike. The premium that I paid was $17.25. So if I subtract $17.25, $32.75 per share is where I will be profitable if I exercise this put option, because I get the right to sell at $50, but I'll still be down because I'm still with $17.25. That's how much I paid to actually get this premium, to get this put option. So that is my break-even price. So anything below $32.75, I will be profitable and I'll be short 100 shares. So let's, for example, say that GameStop gets to $20 by the time this put option expires, which is around March 19th. That means that I'll be up $12.75 per share. If you times that by 100, that's $1,275. So if GameStop is at $32.75, I'll make about $1,200 if I exercise this put option. I'll get assigned, I'll be able to short 100 shares on March 19th, and then at market open, I can just go ahead and buy back those shares right away, or I can hold them to see if we have any more downside. But I think my intuition tells me that I don't really want to mess around with short selling GameStop, but it would be a great way to get out of this. Instead of taking a loss on the position, I can actually take a win by exercising. So that's my plan. That's what I plan to do. We'll see what happens. Obviously, from now to March 19th, we need to see GameStop fall a little bit more, because even though my strike price is around $50, which is right around here, I still need the stock to fall to $32.75. So if we actually, let's go ahead and adjust this, and we'll actually keep this on the chart. So $32.75, that is where I need GameStop to fall below for my put option to be profitable. That is it's sort of a coincidence. That's right around where it's gapped up back here on the 13th of January. So if we do break below this gap, then I'll be profitable on it. So we'll see what happens. I'll keep you updated on this position. Now let's go ahead and break down the CCIV and Riot swing trades that I closed today. All right, guys, so I figured that popping up the E-Trade app would probably make this a little bit more clean. So pulling it up on the screen, you guys can see here's my long-term portfolio. Here are my recent transactions on CCIV. April 16th, $40 call, purchased on the 2nd of February for $12.30 per contract. Today, I sold those for $28.30. So a really nice gain. CCIV padded the long-term portfolio when there was a lot of red, a lot of sort of up and down in the market lately. I was down in a lot of my tech stocks, and seeing that this was holding up my portfolio, I wanted to take those profits, help out the portfolio, hold up a little bit, and not get too greedy on this CCIV swing trade. This was really a momentum trade. The reason I did get those April 16th is because I thought that it would take a little bit longer than it did for this news to come out. So I wanted to give myself some time. But now that we got that merger news, now that we got the rumor hype, I wanted to take advantage of it and lock it in. I anticipate that CCIV should sort of deflate over the last few days now that that news came out, unless we start to see more news come out. But at this time, I thought this was a great time to sell it. So pulling up the profits here, here's a screenshot of when I sold it. I made about $1,600 on it, 128% gain. When a stock or an option that I have is up over 100%, I like to start to trim the position. And at this point, I thought this was a great sell. So about a $1,600 gain on the CCIV trade. So the next swing trade that I have is Riot. The first one was back on the 11th of February, made a really nice gain there. But I'm going to focus on the recent one. So on the 16th of February, purchased those March 5th $70 calls after I saw a lot of momentum pumping it to the name. Sold them today for $15.93, so about a $600 gain on this one. I sold it today. Riot was starting to lose momentum. You guys obviously know how pumped up that stock is. If it dips, I may try to find another opportunity to get in because I am still bullish on Bitcoin, bullish on Riot as a name. But at this point, with the long-term portfolio taking some hits because of the tech stocks that I own, this was another great way to pad that portfolio. So going over to the P&L, about a $600 gain, about 60%. Today alone, I did lose on it, so this was up more at one time than when I sold it. Could have been about a $1,200 gain. I saw Riot start to dip today, and I just went ahead and locked in those profits. With high momentum names like Riot, like CCIV, it is crucial to make sure you lock in some of those profits, because before you know it, these stocks can fall and these option contracts are extremely volatile, especially when you're trading weeklies like I am here. You can lose most of your profits in a day or two, so make sure to lock in those profits. So that's about all I have for you guys in today's video. Very happy with the CCIV and Riot swing trades. I'll make sure to keep you updated on the GME put option if I end up exercising it, or if I just take the loss if we start to see GME get some momentum again. Day trading has been a little bit rough lately. The momentum's not really there. The market seems to be in a little bit of a rut. You know, you have the bond yields increasing, which is affecting tech stocks. The NASDAQ is really taking the hit. We're coming down to the 20-day moving average, which is what I like to see. If we can get some momentum off that 20-day on the yearly chart or on the daily chart on the NASDAQ, maybe we can see a little bit of a bounce. But at this point, I'm not going to go ahead and tell you that I know what's going to happen next. I'm a little concerned about a potential, maybe a little retracement on the market. We'll see what happens. I'm not really interested in trading through this. When you try to find opportunities when they're not there, you're forcing trades and you really will end up losing money. So we'll see what happens. I'll keep you guys updated. Thank you again for watching another video on the channel. If you want to stay tuned for more, make sure to subscribe to the channel, smash that like button for me on this video, and I hope to see you in the next video tomorrow. Peace.